Welcome to the CEEP National Webinar, How to Achieve Impact with Cash and Fixed Income Investing. My name is Deirdre McElroy. I serve on the CEEP Planning Committee and assist with endowment content as well as multicultural church sessions. Just a housekeeping note that we will be accepting questions via the Zoom chat function, and we've devoted Q&A runtime after our speakers have the word. Speaking time will run approximately 38 minutes. We plan to have you out of here in an hour. Let's begin in prayer. The Lord be with you.
And also with you.
Also with you.
Creator, we know when we walk with you, we are your missionaries. Surrounded by cries for justice, we hear your voice telling us what is required. Do justice, love mercy, and walk humbly with our Lord. Strengthen us, Lord, in your brilliance to heal the world. Strengthen our hearts so they beat to the rhythm of your holy will. Flood us with your radical love and light as we walk humbly toward a future filled with encounter and unity. All this we ask through Jesus Christ our Lord. Amen. Can I get an amen?
Amen.
Increasingly, the world is realizing an economy that doesn't work for the society or environment isn't an economy fit for the 21st century. Our endowments have the opportunity to embrace gospel justice with our assets. We can help address key societal issues and environmental issues as part of their recovery. In doing so, endowment investors will realize greater resiliency, will bring our missions to bear, and will have sustained missional success. This webinar series is designed to help you be savvy with the systems we show you and to invest to generate justice where it has not visited. Our next webinar series, which will include racial justice investing, is on August 27th from 3 to 4 p.m. Mark your calendars. In today's webinar, we will inform and equip Episcopal endowment decision makers on how to reach positive social impact with fixed income investments. Investment themes include affordable housing, access to healthcare, economic inclusion, and human empowerment. Missional things. With us today are two experts and friends well known to the CEEP network. James Malone, a passionate impact investor and the CFO of Community Capital Management, or CCM. CCM was founded in 1999 to help banks invest in low-income communities, and they just launched a monumental $2 billion minority cares fund, which James will detail in addition to educating us about the investment environment for fixed income. Welcome, James.
Thank you. Really happy to be here.
We are also delighted to have with us today Episcopal Church Foundation's Carsten Sierck, a lawyer and endowment management expert. Welcome, Carsten.
Thank you.
Carsten was very active in providing content for our endowment session in February when we were back in CEEP, which seems like such a long time ago. Both of our speakers and their organizations are a key part of CEEP Network's endowment intelligence, and both are disciples in their field of work. We begin with Carsten. Today, Carsten is covering reserve funds intelligence for endowments. You will find her supremely practical. She is always an advocate for communication between endowment trustees and the vestry or chapter, and between decision makers and the parish at large. So Carsten will want you to take back your musings today for meaningful conversations back to your people. You have the word, Carsten.
Thank you, Deirdre, and it is a great pleasure to be with all of you today virtually and to be joining with CEEP and with James on what I think is really a superbly important topic right now, and this webinar, a wonderful combination of thinking about short-term investing and reserve funds at churches and thinking about the deep need for impact investing. It's really a wonderful webinar today to combine the two very effectively. So I'm going to start by talking about sort of a basic overview of reserve funds. And this is for churches who are perhaps now wrestling a bit with what is a reserve fund? How much should it be? Should we get one or have one at our church? How do we fund one? And I'm going to start here by sharing my slides. Let's just see here. Share. Perfect. Okay, so here we are. And then this is just a brief overview of the Episcopal Church Foundation. I'm not going to pause here except simply to say that we have an endowment program, quite a robust endowment program. This spring and summer, one of the main topics of conversation has been reserve funds or emergency funds or cash on hand. And I think that in particular, it's been how to connect the use of a reserve fund with the use of an endowment fund to meet needs at a difficult time. A reserve fund is obviously also extremely important for non-endowed churches. And I would say is really a crucial part of prudent financial planning for all churches. So with that, I'm just going to give a very brief overview. These ideas here about reserve funds are not new. They're not complex, but it's very important, I think, always to start with a common understanding. And then for some of you, this may be a moment to go back to your church and talk more deeply with other church leaders about a reserve fund. Obviously, we are still in crisis. In many ways, the market lows of March are behind us, but the future remains deeply uncertain, in particular around the economy, but also in terms of how church will be. And so obviously it's an old saw, but there's always an opportunity in a crisis, and this may be an opportunity to get motivated at your church to revisit what your reserve fund is or could be or should be. Points I might want to make here. The first is that a reserve fund is for the short term. And so that goes directly to how it's invested. Certainly you want to preserve the value of your reserve fund, and you want it to be liquid so that when needed, you can access it. James is going to talk much more about investing short-term funds, but I want to flag that it's for the short term and also that it is intentionally set aside. That's the second bullet there. And it really needs to be a conscious, strategic decision of a church and its leadership to have reserve funds to serve certain purposes. We're going to talk about purpose in a second, but it's with a reserve fund that you are able to meet changing financial conditions and meet changing missional needs without jeopardizing who you are and what you are. Certainly, again, as I mentioned this spring, we've talked a lot about it with our endowment churches. And I think there, I'm just going to give two examples where the conversation really became quite interesting. One is we had some conversations with churches who said, you know what, here we are in the spring, market's down. We would like to delay our endowment draw while the markets are down, and we'll be back in touch when we feel more comfortable taking it. And that reserve fund gave them the ability to do that. That could cover what the endowment draw might have covered for the short term. The flip side, is churches who said, my goodness, our giving is way down. We would like to talk with you about spending more deeply from our endowment because we have insufficient cash on hand. So right there are the sort of two examples where we saw the most connection to endowment. Before I go on, I just want to mention two other things. Here I often use the phrase reserve fund, but I also sometimes slip and say cash reserves or cash on hand, emergency fund, however you label it, and you may have your own labeling at your same church. It's the same sense of short-term funds you can tap into when needed. The other thing is, again, here in these slides, I'm giving a sort of idealized version of a reserve fund as a fund that's held separately. And that may be your case as well. Some churches, though, really hold reserve funds in some sort of combined or linked checking savings account. And some really put their reserve funds in with their long-term funds. There's an allocation to cash in with their long-term funds. And that's how they handle cash reserve. So I don't want to get hung up on where it's held. The best thing to do, as always, is whatever works best for you. So turning now to purpose. This is super important because knowing the purpose of your reserve fund will help you set the right amount. So obviously a reserve fund helps with cash flow management. There's seasonal income fluctuations at many churches. This is of great help there, and many of you already are doing this. Unplanned repairs or other expenses. This happens to churches, buildings, roofs, trees, air conditioning, whatever it is. Unexpected revenue shortfalls. This is exactly where we have been in the spring of 2020. Giving may drop, endowment distributions may decline. This is where our conversations have been, and those churches with reserve funds have benefited, and some of you with insufficient reserve funds may be inspired by exactly this. Two more examples. There's also a reserve fund allows you to meet missional needs. This is also something that has come up a lot in this spring and summer of 2020. Two examples. Some churches have really wanted to respond immediately to new needs in their community. Perhaps an example we hear a lot around food issues or hunger issues. With a reserve fund, you can step right up and meet new needs or increased needs pretty promptly. And the other is around all these churches who have wrestled a little bit with making sure their technology is up to speed with what they're now doing by delivering virtually all of their mission and programming online. And with a reserve fund, some churches were able to meet that. So very important for missional opportunities, very important to know that cash equivalents, short-term funds, fixed income investing, tremendous opportunities around impact and really investing for mission. So James will talk about that at great length later, but I want to flag it right here. Oversight. Just quickly through this, the vestry, as always, retains ultimate responsibility. You want to delegate oversight to a finance committee or treasurer. Certainly ideal to put together a written policy around your reserve funds. A couple things. Ideally, you are balancing giving the treasurer or whoever's paying the bills a fair amount of flexibility, especially around income fluctuations, seasonal fluctuations, but also you are having good, robust oversight. A reserve fund becomes an important financial asset. So any policies that you have should balance the two. And certainly, as always, around just as we recommend with all financial issues, it's really best to have a written policy that can help you, as I'm sure you know already, reach broad agreement amongst all church leaders about the purpose of reserve funds. If it's unwritten, not written down, or maybe unstated, different people, as we know, can have different opinions, and when it comes time to use it, there can be some disagreement. Policy always will help you more easily resolve disagreements or answer questions. It's never about the person, it's about what the policy says. And then certainly you can bake into your policy whatever issues might concern your church about the mission or using short-term funds for mission in whatever way, whatever way you want. I do think there are some benefits to having a reserve fund as a separate fund, and I mentioned, whatever works for your church, but I'll just run very quickly through some of this. Really, it allows the oversight, investment and spending of short-term funds to be different from long-term funds. If you have long-term or endowment funds, there can be sometimes at some churches a little bit of pressure between this year's budget and then preserving and protecting long-term funds so that you're really protecting donor intent around those original gifts to the church. You can have separate policies for each, and it's also it's important to be mindful about the fees paid for investments that are invested for the shorter term. Short-term funds don't return a lot, and you want to, I think, keep fees and expected returns a little bit in balance. So that's just a quick review of oversight. I want to touch briefly on size. This is the big nut, and it is really hard to get a handle on this and to reach agreement. Certainly, many would say the rule of thumb is somewhere around 3 to 6 months of operating expenses. Others aim for more than that. That may be more aspirational, but aspirations are always good. But the key thing going back to purpose is the size of your endowment really will relate to its purpose. And if you mean for it to cover some expected maintenance costs or capital costs, again, we expect to replace the air conditioning in 2 or 3 years, and if you're counting for that, then it should be a little bit higher. The goal is to have enough to provide some protection, but not to have so much that you're really taking away from mission. And this is a tough one. So I think that when we talk with churches, especially this spring, I would say the trend that we're seeing typically is that there's not enough in the reserve fund. And the reason why we can sense that is that for many churches, what they have as reserves hasn't been as protective or as useful as perhaps they might have liked. And that's a signal we were really in a crisis. And so what you've learned at your own church around your reserve funds adequacy or not might be very illuminating.
Carsten, thank you so much for those examples. They're particularly timely. And of course, the call to an incremental plan for reserves at this time makes brilliant sense. And I wonder if you will cover for us some ideas for sourcing for those reserve funds that we're—
Yes, absolutely. So this is actually where I think I can be quite a bit more practical. 2 main ways to develop a reserve fund. One is to build right into your budget an intended surplus. So that might be a line item specifically for reserve fund. And you can set a goal, figure out how much you need to get there over the next X number of years, you fill it in. Or it could be very specifically, a capital improvement fund, which you have decided at your church is part of your reserve fund. So build it right in. And we'll talk in a second about talking about that. That's also very important. The other thing is, unrestricted gifts. So many of you may have a bequest policy in place. Certainly we provide, the Episcopal Church Foundation, sample endowment policies and gift acceptance policies that include a bequest policy, which says typically bequests go into an endowment unless, and there's always special circumstances. And that's a good policy, except if you are really struggling to make a reserve fund. You may opt for a bequest policy that says something like 1/3 of bequests will go into a reserve fund and 2/3 into the endowment until we reach a certain level of reserves, a fixed dollar amount, a percentage, a number of months, whatever. And I really like that. That might be a change for some, but if you're struggling, that can be effective. You never know when you get bequests, but it's effective. And I also like it because that policy can remain in place even when your reserve fund reaches its target level. And then if you spend it in future years and it drops, you already have right there at the ready a way to build it back up again. So the key thing again here about reserve funds and sourcing is you want to spend it when needed. It's there to be spent, but then you want to replenish it and you want to look periodically at the size. And then I just want to wrap up finally with communication. As always, with all financial matters at your church, it is super important to communicate early and often more than you ever think needed about church finances, what they're for, how they're used, how they're invested, how they're spent, the whole package. It's just good policy at a church to be a community and share information. But as you think in particular about giving to your church, the most important thing you can do to enhance giving, especially around gifts to come in the future, is to build trust among your congregation that you as church leaders are outstanding stewards of church assets. And by talking about what you have, how you use it, how it's overseen, it's very effectiveness. You're raising awareness, you're building a sense of enhanced sense of sort of your shared mission. And I think what's interesting now about communication is we're all communicating at most churches a little bit differently. We're not meeting in person. So when you think about communicating in new ways now, as we're worshiping in certain ways now, you want to make sure you share facts, maybe in an annual report, maybe otherwise, but dollar amount of reserves, what the policy is, very important. You also want to share stories. How has the reserve fund helped during this pandemic, for example? What is it being used for? Or also to follow on with where James is heading in the future, how are you investing it? Are you investing for impact? Lots to talk about there around the stories. And then finally, when it works for your church, make time for conversation. It's really valuable to have a healthy dialogue, give and take, back and forth between church leaders and the congregation around all financial issues. When our annual meetings were in person, there's coffee talk beforehand, Q&A during, chatter outside afterwards. You want to find some time for that in whatever way you can. It is supremely important and will really pay off, we have found, by building trust. So that's a quick overview from me. And I want to turn now maybe to Deirdre, but certainly to James, to talk much more about investing reserve funds or short-term funds.
Thank you so much, Carsten. James Malone with Community Capital Management. James will be providing brief commentary on the economy. He will educate us about impact investing in the low to moderate risk category, so on the safer side of the spectrum. He will also show us prudent structures that endowment investors can access to invest in underserved communities. Take it away, James.
Thank you, Deirdre. And Carsten, thank you very much for, I learned some stuff there. That was good information about the importance of having a plan and policy around your cash reserve, especially in a time like this. So that was really, really helpful. So Deirdre mentioned a little bit about community capital, but I'll just say a quick overview. We are an impact investment manager. For over 20 years, we have been managing impact and in ESG investment portfolios. We manage about $3 billion in assets and have 33 employees around the country. Our headquarters is here in Fort Lauderdale area, but we have an office in Boston and Charlotte and individuals in New Jersey and Southern California. So we're around the US. And our flagship strategy is our core fixed income impact investing strategy. I'm going to talk a little bit more about that in a sec. To date, we have invested for our clients, on behalf of our clients, approximately $10 billion in communities all across the United States of America. Our clients range from, we're quite diverse. We range from faith-based investors to high net worth individuals, to banks, to not-for-profit organizations, and now corporations and others as well. So as impact investing grows, we are finding a number of different investors, types of investors that were not participating and now looking to participate. So we're happy about that. And you'll find those of us in the space will throw out these nomenclatures and say things like ESG stands for environment, social, and governance investing. We have so many different ways to talk about socially responsible investing. And specifically today, I will be focused more on impact, and that is for positive, where you're investing with a purpose to make a positive difference in communities and in the environment as well. So moving to the next slide, I wanted to just give you a quick perspective on what's happening, right? The backdrop, we're talking about short-term investment in cash, and we have this economy, we're talking about impact investing. And I don't know if you're able to switch over to the next slide, but when we look at our economy, the COVID-19 pandemic is a big economic challenge and big health challenge to the world globally. And here in the United States, it has more of an impact than anywhere else around the world. The IMF expects the economy to fall 3% this year, the global economy to fall 3% this year. And notably, they expected the global economy to expand by 3.3% in 2020 before the pandemic happened. So you're talking about over a 6% swing in terms of expectation for the economy. Earlier in Q2, we saw some economic activity picking up slightly, but later on in the quarter, with the resurgence of the infection, we saw that the economic activity pull back again really strongly. And we still have approximately 16 million, the numbers came out last week, 16 million fewer jobs. Our unemployment rate is above 10% still today. And, you know, at the start of the year, everyone had great expectations for 2020. With the resurgence of the COVID-19 cases in June, it means that the likelihood of what we talked about earlier on of a V-shaped recovery may not be remotely close to an option now. It's more of a, I would say, Nike swoosh we're hoping for. And, you know, some say we'll have a W shape where it goes up and back down again. But with economic activity, I think that came out 2 weeks ago of about 32% drop in the second quarter, we know we're going to have a challenge there. So what has the Fed done to deal with this? And the Federal Reserve actions have been unprecedented to stem the impact of what COVID-19 has had on the economy. And as a result of them expanding their balance sheet quite a bit, that's we are flush with liquidity and financial support. I'm talking to the tune of about $2.2 trillion. And what do I mean by that? What are they doing? Some of the things, the tools that they're using, they're actually going out and purchasing securities, corporate bonds. They're purchasing ETFs, something that they have not done before, as far as I know, and high yield bonds and other fixed income securities. So these are really unprecedented moves that they're taking. And alongside the fiscal spending that's happening, we know that the Congress, they're working or not working, I don't know what's happening there in terms of adding more stimulus from the one they did a few months ago. So we're adding a lot to the economy. So some speak of the risk of inflation. What does all of that mean for our conversation today? It means that we are in a low interest rate environment. And for those that thought that somehow interest rate will increase this year or, you know, looking out next year, from our perspective, we believe that we're in a low interest rate environment for longer, for now. Now, in that context, with all what's happening in COVID, if you get nothing else from this webinar that we have here, what I want you to get is this. It's time for impact. Why do I say it's time for impact? And I say that, and I mean it with all my heart. Deirdre knows me. I am very passionate about impact, because in this environment of a very difficult economic time, the people that get hurt the most are those that can least afford it. And this is not the time to pull back our giving to those communities, to those individuals. This is not the time to say, well, let's just put our investment wherever we can make the most money. This is the time to double our effort more than ever to be deliberate and intentional about how we deploy our capital. So we're not only using our time and our talent and our charitable giving, but our treasure as well, our investment dollars. How, my light went off. How are we making a difference with our treasure as well? So I'm going to talk about that. Moving to the next slide. What we have here, and I'm going to spend just a quick minute on each so that we have some more time for questions, because I could talk about this for another all day long. On this slide, you see that we have cash reserve, short-term and intermediate term bond. These are investment divided by their duration. So for the short, the cash and cash reserve, you're talking about a duration of 0 to 1 year. Short term, 1 to 3 year, and that's how I'm defining it. And intermediate term, 3 to 5 year. with each of these short-term and cash, very low investment risk. With the intermediate term, you have more moderate risk. As a result, you have income that may be low in this low interest rate environment for those categories. I think page 5 has a nice schematic here that you see, and this is from our friends at FB Harron, that shows impact investment as an asset class and the rate of return spectrum. On the left are the asset classes that generate below market rate of return. Here, the focus is getting a return of capital, where you're just looking to get a return of capital and to redeploy those funds to make an impact in the area that you're focused on. And starting with grant to the right to cash deposit, where investors are asking for a return of capital, you see it there. On the right are the asset classes, private equity to guarantee in some cases, from which investors are expecting a market rate of return. Today, our focus will be where I've circled with cash and fixed income. So what do you take away from this slide? Is that you can invest anywhere along the spectrum and you get a market rate of return, or if it's your desire to have more of a below market rate of return and expect a return of capital. But any asset class that you can think of, there is a way to make impact. So starting with cash and cash reserve, traditional investment options include higher yielding savings account. What are those? Those are savings account where the bank, and mostly these come from online banks, because the brick and mortar bank tend to have more expense and offer these less, but a number of them are offering it limited offer of these higher yielding savings account. And what we're talking about, before it was over 1%, up to 2%. Recently, I just got a note that they're dropping the rate from 1.25% to 80 basis 0.8%. So again, there is some squeeze on interest rate as we are in this economic environment. But you're talking about a savings account that's yielding more than longer term bonds. So these are good options. And you know, firms like banks like Synchrony and Ally Bank and some Goldman Sachs, you could find these. And many of them are federally FDIC insured. The other is money market. We all know about money market. Those are yielding really low right now, 10 basis points to 20 basis points. And you also have CDs. The challenge with CDs is that you're locked up for 6 months to 2 years or so. And yet still you're getting very, very low minimal interest rate today, not getting much there. With respect to impact, I believe cash is the first and the easiest step into impact investing. So if you're saying, I don't know what to do, how can I do this? This is huge. This is too much for me to undertake. This is the first and easiest step. How do you have impact? Something simple as opening a deposit account at a CDFI. What's a CDFI? CDFI is a certified, a community development financial institution, where your focus is that they're looking to serve underserved communities and make a difference. And when you open an account there, they're taking these deposit dollars and they're investing it, they're lending it out to small businesses in certain communities. They are doing great work with respect to minority communities and other types of communities like that. Okay, and then credit union, the same thing, open a deposit account. Mission-driven credit unions, for example, are a good place to place your dollars. Like Self-Help Credit Union is one example. I think they're based out of North Carolina. I like them a lot. We ourselves have deposited with them in the past. And there are other organizations, and all these organizations are working to expand economic opportunities for underserved communities. I want to give one example of a CDFI and a program that they have at this CDFI called CNote and their promise account. And it's one of our most recent cash investment that Community Capital has made, and we're really proud of it. CNote is a woman-led, woman-founded impact investing platform. Very state-of-the-art, we love them. And they're working exclusively with federally certified community development financial institutions and low-income designated credit union. And they offer income and cash opportunities that cover all 50 states and allow investors to customize their investments. Investors can target 26 unique investment themes that include refugee crisis and immigration issues, climate change, affordable housing, racial equity, and you can sort of map it with the UN Sustainable Development Goals. And it's just an awesome opportunity that you have as a cash investor. And their place-based investing is also offered as an option, and investors can target specific geographies with their deposits or their investment with them. In collaboration with CDFI partners, what CNote does is that they work to drive investment capital to these underserved communities and to build more inclusive economy for all. I'll give you one example, and you see the picture there, and I love this story of Marley Trucking. Siobhan Marley out of North Carolina, she had a dream and she worked on this dream, had lots of challenges, but she worked on the business plan. She left her sales position, her regular day job, and even had to overcome many challenges, including breast cancer, to successfully start with her husband a family-operated trucking business with the crucial funding from a CNote partner. And today they have moved from one driver couple years ago to, I think they have 3 or 4 or 5 drivers now. I don't know exactly how much, but they're a thriving business. And to see a young minority woman with her family creating this and having the capital because of the work that firms like CNote and the investments that you can make with them. They have a promise account, and the details of this promise account, you have 90-day liquidity, and you're having interest rate somewhere around 0.5% to 1%. It depends on the program that you have, but they have a number of other solutions as well that can be very useful in the space of short-term investment and cash.
James, thank you for highlighting CNote's work. In our webinar on August 27th, their head of business development, Danielle Burns, who's an environmental, social, and governance investing expert, has been for decades, is going to be speaking. And just a note that CNote, you can start at $1,000 and go up to millions. There's really no barrier to entry to get started with them, and they do have a short-term fixed income at 2.75%.
Yes.
But you'll hear about that in a couple of weeks, but I just really appreciate your highlighting the work that they do. They are, as you said,
it's awesome.
State of the art, and they're partnered now with Community Capital Management, which is terrific.
Awesome. So our next slide sort of goes into the short term, and I'm gonna just I think how are we doing on time?
We could scoot along a little bit.
Okay, so here you have short-term investments. What I'm talking about is a little bit more risk, not 0 to 1 year, but 1 to 3 year in terms of duration. And with this, you could decide, oh, I'm gonna buy treasury bills and other government agencies short-term, or you can go out and invest in a mutual fund or ETF that will provide you more interest rates. So right now, I think the the trailing 12-month yield on a short-term bond fund is somewhere between 1% and 2%, which is pretty good. But in terms of impact, even if you decide to go with a short duration, bond fund, you can focus on impact. If you go to places like the US CIF website, you're able to see funds that have a focus on environmental, social, governance, or impact focus that you can invest in. Also, there are CDFI asset-backed securities. So they may be based on the loans that the CDFIs are issuing to consumers or others. They will securitize those, and you will have now a short-term investment that's giving more than 2%. Deirdre talked about the 2.75% fund at CNote, but there are others as well that will have asset-backed securities, maybe backing loans for solar panel or loans for other sort of consumer assets. And so one of the examples here is on the next slide, which is Aura. And Aura is another investment that we have made at Community Capital Management. And they represent about 22,000 consumer-friendly small consumer loans to borrowers with limited or no credit history. So the beauty about them is that they are offering a service where people who would typically not be able to build credit history could get a consumer loan, build credit history, and then get further access to capital to expand, buy a home, buy a car so they could go to work, do other things. And something like this might be yielding 4%. So you're talking an asset that has a duration sometimes less than a year or even less than 2 years, and it's issuing 4%. That's really lucrative in this environment. And at the same time, you're making an impact and you're providing capital to people who typically might not have gotten it. Okay? So now I want to talk about intermediate term and specifically talk about what we do at CCM. At Community Capital Management, as I said before, we impact investment management. And our core strategy is an intermediate term bond fund. And that is with duration between 3 and 5 years. We're more on the 3-year side of the duration. The strategy, we invest in high credit quality, well-researched bonds that have positive impact. The beauty about it as well is that we're fossil fuel free. So for those of us who care about the environment, this investment does not invest in anything that you will be concerned about creating damage to the environment. You can invest in this strategy through our mutual fund or through separately managed account. And one of the beauties that, like CNote, we are able to geographically target your investment. So if you say, I want to make an impact in the Washington, D.C. area, I want to make an impact in Florida or Virginia, we can target for you. Or we can target one of our 18 impact themes or multiple of our 18 impact themes. And that brings me to something that Deirdre mentioned earlier that I am overly excited about. Given the environment that we're in, there's been a heightened awareness of the racial inequity that exists, the economic injustice that has continued for years, and some of it institutionalized, basically. We have launched our $2 billion initiative where we will, over the next 5 years, we are committed to invest $2 billion in minority related community investments around the country. Very, very excited about that. And what that really is still our core strategy, but we now will invest dollars targeting minority cares in 8 of our themes of our 18 impact themes, specifically targeting minority communities. So these themes include affordable housing, affordable healthcare, economic inclusion, neighborhood revitalization, and minority advancement. And the thing for me that I'm passionate about is, for decades and decades, way back from the 30s, you had things, institutional policies and system that led to redlining, where people were intentionally excluded from getting capital to simply buy a home in a neighborhood that they would want, to get loan for their business. And yes, back in 1968, they had the Fair Housing Act that removed that, but yet still the practice continues even to today. So by driving capital to this space, I believe we can make a difference and help to sort of remove that wealth gap that has existed. One of the examples I want to give is on screen now, which is the Minority and Gender Lens Agency Mortgage-Backed Pool. This is what we believe to be the first minority and women-only mortgage pool that we created about 3 years ago, and we've continued to create other pools since then. And we were able to get this data and put together this pool, and what that does, it really drives capital to this segment of the market where there's a demand for more and more loans to these individuals, and allowing people to get access to capital that they would not have had before. So we're really excited about that. And then, you know, in the end, what I want to say is, with minority cares and with the COVID initiative that we also have, you have to be intentional about our dollars and not just say, all right, we'll allocate it here and however it's invested, that's fine. Because I personally have been one of the beneficiaries that have seen what access to that kind of capital can make a difference. And I don't have time for a story. Deirdre have heard this story before, but I'll just say that I have an aunt in Boston area that over 50 years ago had to skirt around this racial discrimination. And she finally was able to get a loan to buy a house for $25,000 back then. That home today is worth nearly $1 million. She sold it some years ago, but because of that home, she was able to help people go to school. She was able to do things and build middle-class wealth. Most importantly, for me, selfishly, she was able to help me over 23 years ago when I came to the US from Antigua with only $1,000 in my pocket, and give me free room and board, help me with school so that I could get the education I have and to change my life the way that it has been changed. So I know that maybe if she would not get access to that kind of capital and to buy that home, when her other friends and church members were subject to redlining and could not get it and have a completely different trajectory in their life, and were not able to build a kind of middle-class wealth. And I'm just happy that access was provided. So I just wanted to say that this is personal for me, this is important, and it's not just, oh, I'm giving some money here. It makes a difference in people's lives.
Thank you so much, James. And James and Carsten, we do have a question. I'm going to read it and take a stab at the answer. But it is, how do you help people on your board or vestry understand these possibilities, especially in an environment of fear? How do you assist them to see this as even viable? And I want to say, start with this webinar or this webinar content, because what we've shown you today very intentionally is the safer, lower risk of the spectrum for the purpose of opportunity and impact investing. And that can be with reserve funds, if that's what your parish deems missional for you. So we're showing you in some cases FDIC insured, or for credit unions, NCUA, which is the credit union version of a surety protection.
Yep.
And so we're showing you safe and prudent structures. The riskiest thing we've talked about today is an intermediate bond that, we're talking about approximately 3-year duration. And so I'll just see if Carsten and James want to. Carsten, would you like to take a stab as well?
Sure. I mean, I think another interesting conversation with people who aren't quite here yet is we are a church dedicated to providing, we have a sort of a missional focus, and we typically provide our mission in certain ways, but look, there are indeed other ways we can also provide or carry out our mission, and one is through investing. So you see it as an expansion of mission rather than a change or an unusual or a new type of investment opportunity where there might be concern.
I agree.
Thank you. Thank you so much. One thing I want to share with you all is that the CDFI fund has a link. We're going to include a slide on the CEEP Network's YouTube channel from today's webinar, which is How to Achieve Impact with Cash and Fixed Income Investing, August 10th. Joe Swimmer and the CEEP Network will be posting the webinar and the presentations from Carsten and James, and we're going to include a slide that has the CDFI fund. It's www.cdfifund.gov. On that resource, there is a tool where you all can go in and search. There are over 1,131 certified CDFIs. You must only search certified CDFIs, and you can search the entire master list, or you can search by type. So what area of impact, or you can search by state. What place-based type of impact do you want to have? You can include, yes, they're certified by the government. CDFIs were created, went through a certification process through the US government. So this is a government website. Yes. And their certification is a pretty intensive process. It was further enhanced under Obama administration. So the idea here is that you and your parish can look through these. You can just for fun go through the tool. You might want to look at Native American or indigenous opportunities for impact for you all. You may be looking at the land that your parish is on and thinking that that's part of what you want to do. You may be in a state where people in communities of color are disproportionately suffering and underserved. And it's both and. You can do that which you all deem missional. This is an excellent resource. So we will be including that on the YouTube channel for you all. Okay. I don't see any other questions, although the same person keeps asking questions, so she is really front of the class. Thanks for joining us this afternoon. Thank you to Carsten Sierck from Episcopal Church Foundation, or ECF. Thank you to James Malone of Community Capital Management, or CCM. We wish you all peace and radical love, and we will see you again soon. Remember us on August 27th.
Thank you.